All right, you're doing your due diligence. You're looking to go solar, and you're trying to find out different ways that you can fund your commercial solar project. I'm JD Marr, Vice President of Community Development for K-12 Solar, and here today we're at our home office in El Dorado Hills. We're going to focus on commercial PACE, the Property Assessment Clean Energy Program that could quite possibly be that funding source that you are looking for your commercial property to go solar. Joining us to help us out is Peter Grabell. He's the Senior Vice President for Fig Tree Financing down in San Diego, California. Now, Peter, we're going to talk about this PACE program and focus on commercial entities, number one. The PACE program actually was started by Assembly Bill 811 back in 2008 by the Schwarzenegger administration. And as we know, it allows funding for residential or commercial properties in order to help them not only go solar, but for any energy efficient upgrades for their properties. Give us a little bit more background about the PACE program.
Sure, JD. The reason that PACE was enacted back in 2008 was that there was very scarce capital available for small and medium-sized businesses and not-for-profits to deploy for clean energy improvements or anything else for that matter. So this was one of the steps that the government took to help create some liquidity in the market for these small businesses to improve their properties. So with PACE, it enabled the establishment of a number of programs here in California, of which Fig Tree is one program, and we do run our program as a program administrator for one of the state agencies, the California Enterprise Development Authority.
Okay, so we know that the PACE program allows an owner of a commercial property to obtain funds through the county or through the city or through the municipalities. But what about the getting it through a traditional means, perhaps through a bank? We know that the bank is typically funding loans based on the organization's financial performance. But the PACE program funds it based on the property value of the commercial entity. So how is that determined, and maybe you can go over the criteria to get funded?
Sure. So typically in the Fig Tree program, we will finance up to 20% of the higher of a property's assessed or appraised value. So the assessed value is easy to establish because that comes right off the tax bill. But think about an owner who's had a property for 20 years, whose assessment has only crept up perhaps 1 to 2% a year. That property, the assessed value for that property may be far, far below the market value. So we'll look and establish whether we're lending off of the assessed or the appraised value, always looking to maximize the amount of money that we can advance to the property owner.
Okay, so now the property owner, they have some work to do. I mean, Fig Tree and the other third-party entities who handle PACE, you handle a lot of the paperwork, but there are some requirements for the actual commercial property owner. They have to submit financials and appraisal. There's some paperwork. Take us through the steps about how long that takes and what's involved in the process.
Sure. Well, the process starts with the solar contractor, K-12, submitting a proposal to us for a solar PV project quote. We'll then turn around that quote typically within 24 hours and provide a financing estimate to K-12 and to the K-12 client who's going to be installing the solar project. Once the client says, yes, this makes sense for me, I'd like to go ahead with it, we'll then have the client submit an application, which takes only about 15 minutes to complete and send to us along with the required documents. I do want to tell you that the documents that we need up front are pretty limited. We'd like to see a property tax bill. We'd like to see recent mortgage statements if there is any existing debt on the property, and then the ownership entity structure documents if there are any. For example, if the owner is a corporation, then we need to see the corporation papers. If it's a trust, then the trust agreement. And with those documents, we're off to the races.
Well, the big question then typically comes into Should I use PACE or should I just use my local bank? A lot of commercial properties, they have long-standing history with their local banks. They maybe have gotten loans in the past. Sometimes the bank can even offer a lower interest rate. So I guess what I'm asking are there any covenants or restrictions on PACE as compared to going with a bank?
Again, PACE, as you mentioned, does really look to the property as the collateral for the PACE assessment, for the PACE loan. So we are not doing a deep dive into the borrower's credit. We're just looking at the real estate because our collateral for the loan is the property. We don't have the borrower sign a personal guarantee. We don't go through the borrower's financial statements, measuring things such as debt to income ratios that a bank typically would. So we go deep on the property and very, very minimally on the borrower.
So as you said, then it's going to be off the balance sheet. And what we do, we try and get the commercial property owner's bill to zero as much as humanly possible. Of course, it depends on the roof space. And then their payment back to the county through the PACE program, in a perfect scenario, should be less, of course, than what they were paying their electric bill, right?
Generally, you're right. For solar to make sense, it should be cash flow positive to the property owner. The one exception I want to point out to you is when a complex construction project is involved in getting the solar panels installed. For example, a roof mount is the least costly way to install solar. If you've got to do a ground mount where perhaps carports are involved, then a larger proportion of the funds is going towards the infrastructure or the actual construction of the carports in that instance versus the solar panels. So that will affect the length of time that the borrower will have until he sees a positive ROI.
Okay, so I've gone solar. I'm a commercial property owner. I'm a happy camper. My meter's spinning backwards. I've been paying back the county twice a year on my property taxes. It's looking great. I know exactly what I'm going to spend as far as my electricity costs for the next, say, 20 years. And then all of a sudden, things change. And I need to sell my business. I need to sell my building. Take me through the steps then. What happens as a commercial property owner who is a happy camper with solar? I need to sell my business or my building.
Well, one of the beauties of PACE, JD, is that the PACE assessment is freely transferable to a future property owner. So at the time of sale, the buyer and seller would reach agreement on whether that assessment is going to transfer, or if the buyer for some reason does not want the assessment, then the PACE assessment can be prepaid.
There you go. Okay, simple answer. Peter Grabell, Senior Vice President for Fig Tree Financing in San Diego. Number one, I want to thank you very much for helping us out. These are some questions that we're answering here at K-12 Solar. I know you're answering them as well. And for our friends who are watching this in the comfort of their home or business, we really appreciate your time.
Thanks, JD. Good to see you.
All right. So again, if we didn't quite answer your question here, maybe you have another question, feel free to go to our Facebook page. You can go to K-12 Solar on Facebook and send us a private message. You can even email me, jdmaher, M-A-H-E-R, at k12solar.com, and we'll be happy to answer any of your PACE questions or solar-minded questions at all. Again, thanks for watching, and hopefully, eventually, you are going to be the next person who goes solar, hopefully with K-12 Solar. Take care.